My name is Henrik Aadnesen. I'm a partner and head of the shipping department at the law firm BAHR in Norway. We have offices in Oslo and Bergen, and we are also in the process of establishing ourselves in Stockholm and Copenhagen. It is a true pleasure to have been selected by our good friends at Fearnley to moderate this session, as financing and lease financing in particular is an important part of our group's practice. We have an esteemed panel, and I think it would be nice to hear a short introduction from each of them before we start with the specific questions. So starting with the ladies, of course, first. Ms. Ruri.
Thank you very much. Yes. Hello, I'm Ruri Hatano from NTT TC Leasing, and I'm account for the international clients for the shipping industry. And I'm very honored to be here today. Thank you.
Ms. Vivi.
Okay. I am representing SBI Shinsei Bank. We are a member of SBI Group since 2021, and we've been active in shipping finance back when we were a long-term credit Bank of Japan, and now not only domestic market, but also keen to expand our international business. Yeah, thank you.
And continuing with Ogawa-san.
Yep. My name is Satoru Ogawa. I'm leading the Ship Finance Division of Tokyo Century Corporation. Tokyo Century Corporation is one of the largest leading leasing companies in Japan. In the shipping sector, we differentiate ourselves by focusing on the asset values and the partnership. So we provide a variety of the product. Of course, we do the plain vanilla direct lending to our client, but also we arrange the bareboat charter, like a JOCO, Japanese operating lease, and we also do the equity investment, and we are also doing the time charter transactions to our client. Thank you.
Thank you. And Azegami-san.
Okay. Thank you. My name is Masahiko Azegami. I am a joint head of the development ship finance team of Development Bank of Japan. As you know, DBJ is a government-owned financial institution in Japan, and our ship finance exposure is currently about $5 billion US. Roughly 20% of it is allocated to international clients, primarily consisting of top-tier operators and ship owners all over the world. Thank you.
Okay. And last but not least, Endo-san.
Yep. I'm Endo from the Bank of Fukuoka. The Bank of Fukuoka is the one of the biggest Japanese regional bank, and I'm involved in the ship financing since 2010. And then our portfolio for the ship financing is the outstanding is the around 4 billion. Especially currently, our portfolio is largely comprised of transaction with the Japanese ship owners, but we try to expand the direct transaction with the overseas customers. So I'd like to thank the organizers for giving us to this valuable opportunity. And then we focus on the enhanced such kind of transaction, and then we hope that this opportunity will help those of you attending today to get to know our bank and hopefully lead to future transactions. Thank you.
Thank you. Excellent. And a very good selection of panelists, I must admit, giving a very diversified and in-depth knowledge of this sector. And starting off with getting a feel for the current state of affairs, a question to NTT and TCC first. What are the recent trends and the current state in the Japanese financing market, and how is this affecting availability of this type of financing, in particular for international ship owners?
Thank you very much. Yes. Actually, we feel that many overseas customers who seek to find the finance from the Japanese banks and also some for the Taiwanese banks. And yes, furthermore, we also find the regional banks in Japan try to enter into the shipping finance or to expand their portfolios recently. So we find that this is a chance for us to arrange some of the, syndicated loan to have a collaboration with those banks. Yes, for having a bulk, several vessels syndicated loan, or to have a higher price vessels.
So my perception of the current Japanese ship finance market is quite similar to Hatano-san mentioned. There has been very little change since last year, which means that the market remains stable and attractive to the international ship owners. So we continue to see a wide range of the product that is including like a variable charter transactions backed by the Japanese local banks or Japanese banks. And we also see the variable charter transactions from the leasing houses like us. And also we see the Japanese tax lease, JOCO. These are quite attractive to the international ship owners. And these options remain very attractive and remain very active and highly attractive to the international ship owners. And market condition is very good at this moment. So the financial market remains highly competitive, actually. So this means that the terms achievable by the international ship owners is quite competitive, which is coming from the Japanese financial market. Finally, from a geopolitical viewpoint, we also seeing that some international clients are coming to Japan to reorganize their existing financing from the Chinese leasing houses. And I think in Japan, we have a variety of the product we can offer to the international ship owners. So we are very happy to welcome these trends. Thank you.
Yes, and as you touched upon, there is a very competitive market, and I know, Azegami-san, that you have international ambitions. How do your product and how do you differentiate as a financing provider in that competitive market?
Okay, we DBJ provides direct mortgage loan to international clients. And also we provide senior loans through JOCO structures arranged by leasing companies. And as a DBJ is a unique position, and we are a governmental organization, so we have to align with the market pricing level. In the sense, we cannot offer too competitive price. So in other words, the products themselves are not so different from those offered by other ship finance banks. Rather, I believe that our smooth execution ability can be a strength for our bank or other Japanese financiers. There may be some language barriers and there may be some bureaucracy, but Japanese mentality such as a punctuality and keep one's word mindset, pushing in Nigon Wanai, can be a very advantageous for the international client owners as well. And in addition to that, recently, geopolitical risk can be a very significant issue, and Japan is one of the most stable country in terms of the geopolitical risk. So in that sense, this point can be beneficial for international clients as well. In fact, we have observed many international owners try to diversify its financing source geographically and tapping into Japanese financing market.
Yes, and as you said, the political risk is low or stable here, but you have some lease accounting standards becoming effective in 2027, and Ogawa-san, how do you see that potentially affecting JOLCO attractiveness?
Yep. My conclusion is that we expect no significant impact on the JOLCO financing structure regarding the accounting rule changes. So the reason is that the new standard changes the accounting for the lessee, especially the Japanese public company or large-scale enterprises. And however, the most important thing for the JOLCO is that the accounting treatment for the lessor is not expected to change. So even when the new rule is implied, the lessor will continue to use the same existing accounting treatment for the operating leases. So therefore, we expect no significant impact on the JOLCO transactions in terms of the new lease accounting standards.
Okay.
Yeah.
And is there any other regulatory changes that you see on the horizon that may be relevant?
Yes. Other than the accounting standard, I think the key development will be the special depreciation rules. And this rule is very important for the JOLCO for newly built vessels, and they are scheduled to be renewed next April. When this rule was last renewed, it was in 2022, the special depreciation benefits became only applicable to the Japanese vessels. So naturally, this negatively affected the attractiveness of the JOLCO for the foreign-built new buildings. Yeah. So we are currently liaising with our tax advisors to get their expectations on the upcoming changes. And at this moment, we have no specific information on this part, but we are monitoring very closely the development. And we certainly hope that there will be no further negative impact or negative changes. And this is the key regulatory point we are watching right now.
Okay, good. And looking to the future and appreciating that this is a broad question, but what do you see as the most significant opportunities and challenges in the Japanese financing market going forward?
Yeah, I mean, as a financier, that we don't really like uncertainty. But there are so many things going on, and everyone knows that in the shipping industry there are downs and ups. So sometimes, in this case, they create chances, of course, and sometimes such a chaotic situation could potentially drive the market very upward, but it might also complicate our decision making for individual lending cases, especially for now something relate to the States or China. And I think one of the emerging topics in Japan is now that there is a growing attention to strengthening Japan's shipbuilding industry. I think this is triggered by the Japanese government. They observe the Korea's response to U.S. policy, and with increasing awareness, domestically, of this potential opportunity to expand our Japan's shipbuilding market share, I think that could present a significant opportunity for Japanese financial institution as well. And as a Japanese financier, we like the high quality assets, so we all welcome that opportunity to come. Yeah.
Excellent. Yes, and I think Clemens was trying to predict the future in the previous session by a raise of hands, and there has been some game changers, and with uncertain duration, talking about USTR and the Chinese port fees, and have you already seen in NTT the effects of that in terms of refinancing opportunities?
Yes, actually, we already had a request from the client to have the refinance of the ships that already financed by the Chinese leasing company, and now we are trying to close in right now. And also, we also had a case that the shipping company trying to change their the finance if that is under construction right now, and to change to the Japanese financiers upon its delivery. And I think this is a good chance for us to expand our clients, but at the same time, the impact of the USDR is yet, continue including some uncertainty. So we don't assume that this trend will last as forever. So we're trying to find how this would affect our business or not at this time.
Okay, thank you. A little bit back to product structuring. We have seen, of course, many owners deleveraging and optimizing cost of capital based on strong balance sheets, and then releasing capital back. How are the Japanese financiers redeploying capital inflows? Azegami-san,
Okay.
yeah,
Okay.
please.
Yeah. Recently, we have experienced some of our clients prepaid our loans, and to be honest with you, personally, I don't like prepayment. But I also would like to respect the decision, and we redeploy this cash to the new transactions with our valued clients. And additionally, we, DBJ, recently considering to tap into fund investment activity. And last year, we established a bespoke type of credit fund with international fund managers, and whose focus is on a more lower credit level clients. This initiative is still experimental stage and very on small scale, but we would like to expand this kind of activity gradually.
Excellent. And Endo-san, in your bank, now with the vessel values being historically high, how do you view and potentially mitigate residual value and balloon risk when you provide financing?
Okay. At present, the vessel price have rapidly rise and creating the challenging environment for the financiers. Regarding the balloon risk, in the past, the project-based financing with long-term chartered contract was the mainstream approach in Japan. As a result, balloon risk was rarely discussed as the major topics. However, in recent years, short-term chartered projects have become more common, and balloon risk is no longer something that can be ignored. For our bank, to control balloon risk, our bank keeps the LTV ratio relatively lower and then adjusting their repayment schedule while ensuring that the vessel's operating cash flow is not placed under excessive pressure. And then we also conduct sensitive analysis based on the various market scenario, including the change in the vessel price and the charter rate. Furthermore, in order to maintain the balanced risk-return profile, we sometimes, as the Ogawa-san mentioned, we collaborate with the leasing company and utilize risk-sharing structures such as the senior mezzanine arrangements. And that said, there's also important point to keep in mind when assessing the balloon risk. While the construction of the environmentally friendly and dual fuel vessels has been progressing in recent years, it is difficult to assume that the conventional type vessel will maintain their current value in 10 or 20 years from now. At the same time, the long-term value of the environmentally advanced or dual-fuel vessel also remained unclear, and technology and regulation are evolving rapidly. Therefore, for such a vessel, our bank don't prefer to take a risk for the such kind of type of the residual value risk. So we believe it is crucial that the charter rate and the overall project economics can enough compensate for the additional costs associated with the environmental technologies.
And has this development also colored your particular focus on vessel types and shipping sectors?
Historically, the Japanese financiers have been most experienced in providing financing for vessels built at the Japanese shipyard for Japanese ship owners. As a result, the vessel type can be constructed at Japanese shipyard, such as bulk carriers, container tankers, and naturally dominate their financing portfolios. These vessels are generally highly versatile and from financiers' perspective, relatively straightforward to manage. However, recently there has been the increased vessels less familiar. For example, some offshore SOV or CTV or FSRU, something like that. For financiers, for Japanese financiers, assessing the asset value of these type of vessels can be challenging. In the short term, it may be preferable to finance general conventional type of vessel. It's easier for us, like the bulk carrier, the container. However, in order to continue growing and advance as a financier, we recognize the importance of participating in next generation project involved in such kind of new SOV or CDB or something like that. Engaging in these projects is a necessary step for us to expand our expertise and remain relevant, rapidly developing industry. Yet, these vessel types come with significant uncertainties, both in terms of market condition and long-term asset value, and there have the high price level. This market is crucial to carefully evaluate cash flow project and ensure the creditworthiness of charterers and cargo owners before committing to the finance.
Yeah, and as you touched upon, we cannot avoid speaking about the green development, and it both represents opportunities, but also challenges. And within your bank, what are you doing sort of to secure these type of green financing mandates?
Yeah. We are actively working on sustainability-linked loan and other initiatives that align with the transition finance framework. So we are one of the signatories of Poseidon Principles. But however, the key challenge is that the ship owners in Japan themselves are not really active in this because of who's going to bear the cost and how's the supply go. So I think the outlook remains still uncertain, even more due to geopolitical issues nowadays. So I think it's not really active right now, but I think in Japan, green financing that include some green elements will provide us some incentives or motivation to lend money to the ship owners, to shipping companies. And therefore, we will encourage the shipping companies to do this, especially for inviting regional banks when structuring a large-scale transactions. So this is a point that we would like to continue to emphasize going forward for both domestic and international companies.
Mm. And of course, looking at the dual fuel or the alternative fuel engined vessels in particular, how do you assess those from a financing perspective, and perhaps in particular in relation to the residual value risk? And I guess that's a question for all of you, as the consideration may be different. Starting with Ogawa-san.
Yes. I think it's a very good question because we have no answer at this moment. We still are studying how we can evaluate those sort of the vessels. But we have the ship owning capacities, and we, through the joint venture, we are owning the LNG carriers or dual fuel vessels. It's ammonia, but methanol. So through these activities, we would like to study how we can evaluate the residual value risk for those vessels in the future, near future, yeah.
And how is this at NTT, Ruri?
Okay. Actually, at this point, we don't put premium to those vessels that can use alternative fuels. And since the mainstream for the alternative fuel is yet clear at this point, our asset is such a vessel that can use such a new fuels, but at the same time available for the conventional fuel oils. But considering the recent trend, we think that we need to study for this trend and to be able to prepare for the new type of technology for the vessels for the fuels.
And in Shinsei Bank?
Yeah, just I think basically the same. Dual fuel vessels come with higher price. So assessing their future value remains really difficult due to now there's still a lack of track record. So to be honest, we will likely proceed only if ship owner provide a relatively huge equity. If the transaction is backed by a long or fixed charter, or maybe they will provide some strong corporate guarantee. So yeah, that's the thing we are thinking.
Yes. And in Fukuoka Bank?
As Ogawa-san said, we don't have any answer at this moment. But if we challenge such type of vessels, we believe that the vessel approach is the first participate in the syndications of the high-quality project. And then these allowed us to gain experience and deepen our understanding and build the knowledge and necessary to handle more complex and next generation vessel type of safety and effectivity.
Yes. And we have in Norway we have an additional sort of potential concern. It's an upside to begin with, because it's you can get very good subsidies in support of zero emission engines, but that support and subsidies are dependent on meeting operational requirements at prescribed times, which are hard requirements, which of course means that if you don't meet them and you have limited operating experience in actually knowing what the engine will perform, then you have an additional potential refinancing exposure. So I don't know, Azegami-san, whether you have some similar concerns here in Japan, or generally how you look at that type of residual value risk or refinancing risk.
Yes, yeah, we have similar view with these bankers. Yeah, I've heard that there is a 10% premium compared to conventional fuel vessels, but we don't have any method to justify this premium in terms of the how can I say financial way. So yeah, we DBJ would like to deepen the knowledge of evaluating this kind of asset, and in the future we would like to provide more aggressively to build these kind of vessels to support the net zero target in 2050.
Okay. And Ogawa-san, in respect of the JOLCO investors, how do they view sort of these type of assets, and how is the appetite for financing through JOLCO structures?
Yes, we have arranged several JOLCO transactions with the sustainability finance framework for eco-friendly vessels. And based on these experiences, in this transaction, we expected a lot of the investors' inquiry or investors' application for those vessels. However, the interesting story is we saw no differences between those eco-friendly vessels and the conventional vessels. So my answer is that it will give any impact on the investors' appetite. Their primary motivation is still remain another benefit of JOLCO. However, the green element is very important, very crucial for the lenders, and we see that lenders are keen to participate in those sort of the transactions. And naturally, we are expecting that more competitive debt terms can be achievable if we arrange the eco-friendly vessels or that JOLCO with the sustainability framework agreement or something like that. So, we, as everyone mentioned, that we see more dual fuel or alternative fuel vessels in the future. So we would like to keep the JOLCO transactions very attractive, not only for the lessees, but also for the lenders.
Thank you. I must admit it's impressive answering to the questions here, and this provides so good insight into difficult challenges, but also opportunities, and perhaps rounding off with a more fundamental question, which I think is important to clients who look to finance in Japan. And it's been also touched upon both in terms of the importance of face-to-face meetings and deal time, but how important is relationship-based approach in this sector? For instance, for NTT, Ruri.
Okay. As being a Japanese financer, we value the client that we once closed the deal, and I think this is pretty common for the other Japanese bankers too. But at the same time, if the shipping company's financial result is upgraded, then they will also require us to upgrade the terms. So sometimes we find difficulty to having a deal with the previous deal's terms. So in that sense, we are trying to have the flexibility for the terms to attract the clients, like offering the RCF, a revolving credit facility times, and also trying to have the older vessels, or like to have the container box finances. And also we do some one package for the JOLCO to attract the clients, yes. So these are the kind of flexibility that can be achieved with us being the leasing company in Japan.
And I think, Azegami-san, you mentioned to me earlier that it was actually a requirement to have a face-to-face meeting and regular meetings. How is that with your bank?
Okay, DBJ sees a long-term relationship as a very, very important factor. So we are basically very flexible, but one important requirement for our bank to build a relationship with new clients is a face-to-face meeting, and hopefully we would like to drink together before the first transaction. This is not a requirement, but hopefully, and so. We basically face-to-face meeting is very important factor, and and our clients also understand the long-term relationship is very important as well. And so the current finance market is very, very competitive, and sometimes we cannot meet the expectation. And sometimes, Fearnley Securities put strong pressure on me. But you know. But our clients also value the long-term relationship. So I believe that there is always point where we can make an agreement.
Well, I guess there is worse things to imagine than going to Tokyo once a year. So, and if any clients is in need of that, I'm happy to volunteer to follow up the investment. And I guess, Nicholas, we now have the opportunity to follow Azegami's recommendation and have a drink together. Thank you.
Drinks? Yes. Thank you very much. Thank you very much. Very well.